PayPal stock, ticker symbol PYPL. This stock is down roughly 70% from their all-time high in July 2021. And year to date, this stock is down 51%. So this stock had a rough time lately. Based on the PE ratio, which is sitting at the mid-20s right now, PayPal stock is entering the buy area. But how about the other fundamentals of this company? And what about the outlook for the coming years? In this video, I will show you everything you need to know about PayPal holdings. I will show you what they do, and I will show you my fundamental analysis to see if PayPal stock is a buy or not. I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. Please subscribe to join the community and to receive multiple analysis every week, where I will tell you everything you need to know about the stock market. So, what does PayPal do? PayPal Holdings is a technology platform that enables digital payments and commerce experience on behalf of merchants and consumers across the world. It operates a global two-sided network at scale that connects merchants and consumers with 426 million active accounts across more than 200 markets. In 2013, PayPal did 3.2 billion transactions. In 2021, PayPal did 19.3 billion transactions. This is a huge increase. And it's likely to grow even more from here, because the e-commerce market is going to grow a whole lot more, as we see here. Asia is expecting a 51% increase in e-commerce sales by 2025. China 49%, Europe 42%, and North America around 35%. An increase in e-commerce growth means more transactions will be processed, and more transactions can be processed by PayPal, of course. When we check the total amount of people that uses PayPal, we see that in 2013 around 143 million people used PayPal. In 2021 it sits around 426 million. A big increase, and again it's likely to grow even further from here. One of the more interesting things is that PayPal can generate more revenue in different ways. One of them is increasing the amount of people that are using PayPal, as we saw a second ago. Another thing is to increase the amount of transactions that people do. In 2013, PayPal had an average of 23 transactions per account. In 2021, it's around 45. Again, a big increase. Another great thing is that PayPal is the most accepted digital wallet among the biggest 1500 largest online retailers across North America and Europe. PayPal tripled Apple Pay, which is sitting at the second spot. In this sheet we see the recent partnerships and expansions of PayPal with some big companies. For me, it's really important that PayPal keeps expanding the business, so this comforts me a lot. One thing to keep in mind are the active accounts and the growth rate. In this graph we see the active accounts is growing in the last couple of quarters, but it's growing at a slower pace. And that's also quite logical, because of the lockdowns back in 2020 and 2021. People simply bought more stuff online back then. It's the same story with the net new active accounts. It's still growing, but at a slower pace. So this is something you want to keep an eye on. You want them to grow in double digits here. So now that we know a bit more about the company PayPal, it's time to check the historical stock price and compare them with some competitors. For this comparison, I will use PayPal, the S&P 500, ADP and SQ, both competitors of PayPal. We know that PayPal is down roughly 70% from the all-time high back in July 2021. But here we see that you still have beaten the S&P 500 on the 5-year stock chart. ADP has returned a 125% and SQ has returned 546% in terms of stock price. And here it gets painful. We see that PayPal is down 64%, while the S&P gained almost 8%. ADP also gained 20% and SQ has lost 53%. On the 1-month chart we see that PayPal is down roughly 20%, while the S&P 500 is nearly flat. ADP has gained 8% and SQ is down 18.5%. As we all know, PayPal went down a lot. But for me that's not a bad thing, because right now they do enter the buying area. Let's find out when this stock will be a buy by checking the fundamentals of this company. So, PayPal is a 119 billion market cap company with a PE ratio of 29. But when I check some other sites, I see the PE ratio is around 25 to 26. So to me, it feels Yahoo Finance isn't up to date. The forward PE ratio is sitting at 22. So right now it's below 30. So based on the PE ratio, I think PayPal is a buy. But let's check the other fundamentals first for the final conclusion. Operating margin is sitting at 70% and the profit margin is sitting at 16.4%, which are both fine in my opinion. You want them to sit above 10% in general, which they do. But to be honest, I would love to see a higher profit margin for this type of company. So I think this is something they need to work on. I would aim for a mid-20s profit margin. Return on assets is really low, sitting at 3.7%. You want this number to be above 10%. So they also have to do some work on this one. Return on equity is fine by me, sitting at almost 20%. The 12th trailing month revenue is sitting at 25 billion, and PayPal has a quarterly revenue growth year-over-year of 13%, which we saw earlier in this video. Revenue is still growing, but at a slower pace lately. In this chart we see the revenue growth of PayPal. It's nice and consistent, so this comforts me a lot. You want them to increase at a steady pace. The EPS is growing as well, which is a great thing. This is because earnings are increasing, but also because PayPal buys back shares, which we will check in a minute. First, let's check the balance sheet. PayPal has a total cash of 9.5 billion and a total debt of 9.8 billion. They are almost capable of paying down all their debt, which is a great thing, so this comforts me a lot. Operating cash flow is sitting at 6.3 billion and leverage-free cash flow is sitting at 2.75 billion. It's really important that this number is growing every year because free cash flow is used to pay down debt, buy back shares, do acquisitions and pay dividends. And of course, research and development. In this graph we see that the free cash flow is increasing in high amounts. In 2018 it took a big jump, which is a nice thing in my opinion. Since PayPal doesn't pay any dividend, all the cash is invested directly back into the business by doing acquisitions, buying back shares and everything else. When we check the shares outstanding, we see that it's decreasing, which is a good thing. When a company buys back shares, the EPS will go up, which attracts other investors and will increase the stock price. This chart might give you a wrong idea in terms of amount of buybacks, but in the last 5 years, PayPal bought back roughly 2.4% of the shares outstanding. I would love to see this number around 8 to 12% to be honest. So it's a good thing they buy back shares, but in my opinion it should be a little bit higher. Now that we know the fundamentals of this company, it's time to compare them with some competitors. In this case, automatic data processing, ticker symbol ADP, and Block, ticker symbol SQ. First thing that catches the eye is that PayPal is by far the biggest company in terms of market cap. They have a total market cap of 120 billion. ADP is sitting at 96 billion and SQ is sitting at 72 billion. The valuation is quite interesting because PayPal is significantly lower versus the competitors. Even the price to free cash flow is significantly lower again. So in terms of valuation, PayPal is definitely the winner here. Revenue growth year over year is the highest at SQ, with almost 86%. ADP is sitting at 7.6% and PayPal is sitting at 18%. SQ also has the highest revenue compound annual growth rate, so SQ is the winner in this case. EPS is growing the most steadiest at ADP and leverage free cash flow has again the highest at SQ. PayPal has the highest gross profit margin with almost 47%, but ADP is really close with almost 45%, and SQ has only 25% profit margin. Net income margin is the highest at ADP with 17.5%, while PayPal has only 16.5%, and SQ only has 1% net income margin. Return on equity is the highest at ADP, but PayPal also does a great job with almost 20%. Return on assets is low at all companies and return on capital is again the highest at ADP. And SQ has a really low return on capital. PayPal has the most amount of cash with 9.5 billion and is almost capable of paying down all their debt. ADP has 1.8 billion in total cash and a total debt of 3.4 billion. I think it's fine. They are capable of paying down at least half of the total debt. SQ is also almost capable of paying down all their debt, so that's a good thing. Overall, I think all the companies have their pros and their cons. But if I had to choose right now, I think I would go with PayPal. They have the most steadiest fundamentals overall, and both EDP and SQ have great things within the fundamentals, but also have really bad parts in the fundamentals. So right now, PayPal is the winner here for me. My final conclusion is that PayPal is a buy for me when the PE ratio is just a little bit lower. Based on the fundamentals of this company, I will buy, but it feels to me that this stock is going down in stock price just a little bit more. So normally I'm not a time the market type, but this one feels like an easy guess. I think the fundamentals of this company are great and the company is able to grow the business. They even did some acquisitions, which is great to expand the business. Next to that, e-commerce is also growing, which is a great thing for PayPal. This means it's more easier to increase the total transactions, for example. A thing to keep an eye on are the new net customers. You want this number double-digit growth, and right now it's still growing, but it's not in the same amount as it did before. To sum it all up, I think I will buy PayPal, but for now I will wait for the earnings. It could easily happen that this stock is going down big time because of a weak outlook or disappointing results. So that could be a perfect time to buy if there is an overreaction. So I will put them on my watch list and then when the time's right, I will buy them. But remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.